There is real money sitting on your car insurance policy that you may simply not be claiming. A single discount can knock $1,000 off your bill, and most drivers are stacking only a fraction of the ones they actually qualify for. But here's the twist. Some of the discounts insurers push the hardest are quietly the weakest, and one of them can even raise your rate. So today we rank the discounts that are real money against the ones that are pure hype. Back to Maria one more time. She has been with the same insurer for 6 years, never reshopped, and she thinks staying loyal is saving her money. It is doing the opposite. She has 2 cars and a short commute, and she is not claiming the discounts that fit her perfectly. So let us walk the whole list, find her missing money, and rank every discount by whether it is actually worth chasing. One disclaimer. This is decision math, not insurance advice. Costs vary by state and insurer. Confirm with a licensed agent. Start with the biggest, bundling. Put your home or renter's policy with your auto at the same company, and you can save up to about $1,000 a year. State Farm goes as high as 23%. It is genuinely the largest discount for most people, which is why every agent leads with it. But hold that thought, because bundling has a catch we are coming back to, and it is the catch that trips up almost everyone. Next, and this one is Maria's, the multi-car discount. Put 2 or more cars on the same policy and you save up to about 25% at Geico, 20% at State Farm. Maria has 2 cars, and depending on how her policy is set up, she may not be getting the full credit for it. This one is easy, automatic when it applies, and pure upside. If your household runs more than 1 car, it should already be stacked. Then, low mileage, Maria's second missing one. If you drive under about 7,500 miles a year, low mileage and pay-per-mile programs can cut your bill up to 30%. Maria works a hybrid schedule and barely drives. But her old policy still assumes a full commute she stopped making years ago. She is literally paying for miles she is not driving. This is the quiet one people forget to update, and it can be hundreds of dollars a year. And here's where those figures come from. Now, the free stack that costs you nothing but a little cash flow. Paying your 6-month term in full instead of monthly saves up to 20% at some insurers. Turning on autopay adds a few percent more, and going paperless adds a little on top of that. Stack all 3, and you are looking at real savings for changing how you pay, not what you buy. If you can float the payment, this is the easiest yes on the list. If you have a student on your policy, this one is big. A good student discount, usually a B average or better, saves up to about $540 a year at State Farm and runs anywhere from $150 to $780 depending on the insurer. It is one of the only levers that actually cuts a teen driver's brutal rate. If it applies to your household and you are not claiming it, that is money on the floor. Next, the who you are discounts. Insurers quietly reward your job and your affiliations. Military members get some of the steepest deals anywhere. USAA offers up to 60% off to store a vehicle during deployment and low base rates on top. Teachers, nurses, engineers, alumni groups, big employers, and warehouse clubs can all unlock group rates you will never see on a public quote. It costs nothing to ask, and the answer is sometimes worth hundreds a year. And a small but reliable one, defensive driving. Complete an approved course, and most drivers save $50 to $200 a year. And the discount usually lasts about 3 years. The course itself costs $20 to $100, so you break even in weeks. It is especially strong if you are over 55 or a newer driver. Not huge, but it's guaranteed money for an afternoon of your time. Quick pause. If a clear ranking like this saves you money, subscribe. It is the cheapest way to make sure the next one finds you. Now the discount insurers push the hardest and why you should be skeptical. Here's the one the ads shout the loudest, Telematics. The apps that track your driving. They advertise up to 40% off. The reality is far messier. In one large study, only about 31% of enrolled drivers actually saw their rate go down. Nearly 1 in 4 saw it go up, and the rest saw no change at all. So the app that promises to track you and save you money quietly does the opposite for a huge share of people. Telematics rewards one very specific driver and quietly punishes another. If you drive few miles, brake gently, and stay off the road late, enroll, you will probably win. But if you have a long commute, brake hard, or drive a lot at night, that app can raise your rate and take your driving data for the privilege. So Telematics is not a no, it is a maybe, and only for the right driver. And here's the trap that undoes all of it. A bigger discount is not the same as a lower price. Watch this. See, the AAA bundle discount was smaller, just 14%, but it produced a cheaper final bill, about $2,600, then State Farm's flashy 23% discount, which landed near $3,400 because the starting rates were so different. A discount off a high base can still cost more than a smaller discount off a low one. And one more bit of math people get wrong: stacked discounts multiply, they do not add. A 25% discount plus a 15% discount is about 36% off, not 40. So chase the final price, never the biggest percentage sign. Which brings us to the biggest discount of all, and it is not on any list. It is leaving. Drivers who switched insurers saved a median of $461 a year, and 92% of switchers saved something. Insurers quietly raised the rates of loyal customers precisely because loyal customers do not shop. Your reward for staying is a higher bill. 6 years of Maria's loyalty did not earn her a discount. It earned her a penalty. So the verdict for Maria. She finally claims the 2 discounts that fit her, multi-car and low mileage. She skips the Telematics app because her commute would get her penalized, and most importantly, she gets 3 fresh quotes and makes her insurer earn her business. Her 6-year loyalty penalty turns into real money back without dropping a single bit of coverage. That is the whole game. So here's the whole thing in 3 lines. 1. Claim every discount that genuinely fits you: bundling, multi-car, low mileage, pay in full, student, affiliation. 2. Skip the hype, only take telematics if your driving suits it, and always chase the final price, not the biggest percentage. And 3. The real discount is to reshop your rate every year or 2, because loyalty is the most expensive setting on your policy. That is every discount worth chasing. There is one last decision that can quietly undo all of these savings in a single phone call: filing a claim you should have paid out of pocket. The last one in the series runs that exact math. It is right here. See you there.